อังกฤษแต่ใน Q&A มีใครก็ถามเป็นภาษาไทยก็ผมจะช่วยแปลได้นะครับ Thank you all very much for coming. We are from Indorama Ventures Public Company Limited. I'd like to be able to introduce our team to you, starting from the far right. Mr. Sanjay Ahuja, who is the head of M&A. Mr. Ashok Jain, who is the head of corporate finance. Mr. Alok Lohia, who is the group CEO and vice chairman. And I am Richard Jones, head of investor relations. So without any further ado, maybe I could ask Mr. Lohia to start the presentation.
Thank you, Richard. Good afternoon. Welcome to IVL's Q1 2010 earnings release presentations and business discussion. With your permission, we can accept the disclaimer page and proceed to the next slide. The theme today, as always, remains unchanged from the past, and we will focus on growth, not only and not any growth, but prudent growth. Next, please. The summary highlights of Q1 2010 are in line with our expectations. At the time of the release of our full year 2009 results, I had mentioned that we expect Q1 2010 results to meet or exceed Q4 results. I am pleased to announce that we had a 15% increase in earnings over Q4 2009 and a whopping 43% increase year on year. The free cash flow from business and the capital raising from the IPO allowed IVL to reduce its net gearing to 53%, a reduction of 16% from a year ago. Since the IPO, we have announced 3 value-accretive initiatives, of which the latest one is our board approving a very exciting brownfield expansion at our integrated site in Rotterdam. I will discuss that in more detail later in the presentation. To summarize, the markets is never easy, as we continue to see volatility in the broader markets, be it crude oil, stock markets, or the currency. IVL has been able to continue to deliver growth on all fronts despite this volatility. And I'm proud that our leadership teams at all our locations are able to perform well and deliver results in line with our expectations. And quite a few times, the results they deliver are exceedingly better. While broader markets remain volatile, polyester continues to grow consistently, and I've said in the past, the polyester chain grows at multiples to GDP growth and is consumed at all times, good or bad. Next, please. I would now like to request Ashok Jain to please take us through the financial results. I would then come back and take you through the strategy and the outlook sections. Thank you.
Thank you, Mr. Alok Lohia. Good afternoon to all of you. In the quarter, we saw higher returns to shareholders, primarily from growth in sales and earnings in the quarter, which was a result of growth across all our business segments. The net profit increased to Baht 1.6 billion, a growth of 15% quarter on quarter and 43% year on year. This growth in earnings has been achieved despite strengthening of Thai baht quarter on quarter against US dollar by 1.3% and against euro by 7.5%, as we have overseas business and around 50% of our revenues are contributed by overseas subsidiaries, which then gets translated into Thai baht. The sales recorded in the quarter is 24.1 billion, which is a growth of 15% quarter on quarter and a result of higher volumes and selling prices. EBITDA recorded of Baht 3 billion in the quarter, which is a growth of 12% quarter on quarter, result of higher margins particularly in our PET business. Besides, we were able to reduce interest expense by 8% quarter-on-quarter and 31% year-on-year, as our debt has been reduced by cash flow generated from operations and IPO proceeds. The interest coverage ratio stands at 9.3 times. The net margin was 6.6%, which was stable quarter-on-quarter, despite higher crude and petrochemical prices in the quarter, and it was higher year-on-year. The annualized return on equity remains at above 30% level, and the annualized return on capital employed increased to 15.7% from 13.3%. Taking you to our business segments, in PET polymers, we saw higher volumes and margins in the quarter. PET business is our largest business segment, and in the quarter represented 59.2% of consolidated sales and 55.7% of consolidated EBITDA. PET business had a good quarter, during which recorded higher EBITDA of Baht 1.7 billion, a growth of 27% quarter-on-quarter. Also, EBITDA margin increased to 11.8%, which was 11% in the previous quarter. This margin improvement has been achieved despite increase in selling prices by 14%. The higher EBITDA is a result of higher sales and volume growth of 8%, which was primarily contributed with the startup of our Alpha PET facility in the US and conversion of a polyester line to PET line at our Rayong facility in Thailand. There was a slight increase in our utilization rates to 94% from 93%. Moving to the next business segment of polyester fibers and wool. In the quarter, the business turned to positive earnings. In the last year, we had started up our Rayong facility, and it took us time to revamp the facility. So the quarter saw the production has stabilized. There has been margin improvement and reduction in conversion cost from switching to natural gas from fuel oil. The wool yarn business also reported higher utilization rate, growth in volume, and growth in earnings in the quarter. There is a marked improvement vis-a-vis Q1 2009, when the acquired polyester fiber plant in Rayong was restarted, and both lines were operating for production of polyester fiber, which now one line is being operated for fibers and the other line is being operated for PET resins. The utilization rate in the polyester fiber business was 113% versus 74% when we started in Q1 2009. The total sales increased to 3.5 billion, a growth of 83% year-on-year, which is driven by volume growth of 30% and increase in prices by 45%. The reported EBITDA in quarter was 423 million, a growth of 57% over Q1 2009. The polyester business segment is taking up investments in machinery to produce higher value addition of fibers and yarns, and also is debottlenecking capacity at its Nakhon Pathom facility. So we expect the positive performance to continue during the year. The next business segment is our PTA business. PTA business continues to perform well in the quarter. PTA is primarily for captive consumption in our PET and polyester fiber business, and surplus quantity is sold to external customers. 48% of our PTA revenue was derived from intra-business segment sales within IVL. The PTA business represents 26.5% of consolidated sales and 30.2% of consolidated EBITDA. During the quarter, there was a utilization rate increase in the PTA business segment from 97% to 100%. There was a revenue growth of 12%, primarily from external sales to PTA customers, driven by volume and increase in prices. EBITDA growth of